Welcome everyone to the fifth episode of Stocks with Charcha. Today we will be joined by Nag once again, and the topic that we will be discussing today is retirement planning and how equities can help. So Nag will join us shortly in 1 or 2 minutes. So retirement planning is a topic that Nag himself suggested and is something which is very relevant you know and ultimately we invest in the stock market uh, to create long term wealth, right? That is the idea. And a lot of the times this is dedicated to early retirement or retirement with a much larger corpus than what we would have otherwise had without equities. So we'll just wait for a few minutes, right, and let Nag join. In the meantime, I can see some of you are live. So if you have any questions with regards to the stock market or any particular stock, so for the next 2 minutes, I can take questions, and then we'll start with the session. A lot of you are live on YouTube. So if any question you want to ask about any particular stock, I can give my views on it. Okay, so while Nag is joining, what we can do is, I can just share some of the interesting stocks that I have been looking at. I would be happy to share them with you, and you can also see what are some of the stocks that I'm looking at. Okay, so this is one stock that I'm looking at, Permanent Magnets. Very interesting company. So they make magnets, right, which are used in various industrial applications. For example, it's used in oil refineries, gas refineries, water purifications. So all these things, they need to remove metal elements. Yeah, Nakilo. Okay. Mm-hmm. Okay. So just log in through Safari. Okay. 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 Uh, I think I might have some. Let me see. I'll share with you. Okay. 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 Just- Okay, everyone. So finally, Nag is here. We had a little bit of login issues, but finally we're here.
Sorry,
So
sorry. Okay.
not an issue, not an issue. So thanks, Nag, for taking out the time.
Yeah, yeah.
Always wonderful talking to you.
Nice meeting. How are you?
Yeah, I'm doing well. How are you? How are
Good,
things
good.
there?
All good. Suddenly, my system cringed a bit just because I usually log on the Safari, and now it's on this Chrome, right? So all credentials have to be transited. Last time somehow bugged. This time
Got
some
it.
problems.
Okay.
Pretty fine.
Right, right, right. Let's start then. So there are around 23 people live already watching us, and more will join soon. So Nag, you can introduce us because it was your topic that you suggested. You can introduce us what you mean by retirement planning. How do you approach it? What is the how's other how are other people supposed to look at retirement planning in very layman terms, in very simple terms?
Yeah, exactly.
What is
Correct. So
retirement plan?
I want to be as lay as possible so that everybody can understand. See, what is retirement? Retirement is a phase where you don't have any obligation on your head, right?
Hmm.
Specifically speaking, your financial obligations, meaning like you don't have anything to achieve, you don't have any ambition, okay? Or on that front, like you want something coming for you, okay, as a financial inflow, so that your basic things or any other expenses that you factor in can be covered,
Hmm.
right? So now I'll say, for example, Abdullah, let's take your case, okay, right? Say for example,
Okay.
you are working now, okay, you'll have definitely certain dreams or goals or whatever, right? What you'll try to do, you will try to achieve all of them, and you will say I'm done, right? Or you will try to go for your new passions wherein you don't have any obligation to work.
Right. Right.
Say for example, people say that I want to retire at 45 or I want to retire at 50. So what does that the mean is, okay, they don't want any obligation on the head. Okay. And
Hmm.
it
Hmm.
doesn't mean that they don't want to work again. Okay, they will work, but they will work to their passionate core,
Right.
right? So say for example, let's take my case. For example, I'm just taking a scenario or X case, right? Say for example, if that guy will tell you that, okay, if I get 1 lakh rupee per month, given I have a house or given I don't have a house, whatever, okay, if I get 1 lakh per month, I'll be,
Yeah. Please continue. Please continue.
yeah, I'll be happy, so that I don't need to work, I don't need to work for money, right? But how that will happen, okay, right? So in order to make you get 1 lakh rupees, say for example, I'll give you 1 lakh rupee every month, but after 5 years your 1 lakh's value of rupee will come down to 50K, right? So 1 lakh is not actually the 1 lakh that we want on a monthly basis, because there are other certain factors like inflation that comes in, kicks in, right? And the value of your expenditure will go up, right? So there are different things here. See, what is the point you want to retire, right? And what is that monthly expenditure that you want, and what is the inflation that is in the economy right now, and what is the corpus that you need to build to sustain that inflow or so-called pension for the rest of your life in the sense till the end of your expected life.
You're asking me for a number.
Yes. So let's calculate it scientifically, okay, instead of having anything random, okay. So now the point here is, okay, how we can scientifically draw a retirement plan is the question, and after drawing the plan, how equities will help our retirement plan to be a reality,
Right.
right? So the first step for that will be, okay, say for example, Abdullah is married, Abdullah has a wife, and Abdullah is with two kids, for example. right?
I don't have a
As
wife. Okay.
okay, if you are married, assume scenario, the given scenario is married, for example, right? Okay, so now your retirement is something like you want to see your kids independent,
Hmm.
and they will be not part of your entity. Only you and your uh, wife, okay, will be part of the entity, right?
Future wife.
Where,
Yeah.
yeah, future wife, wherein both of them need a corpus, okay, which will help them to get those inflation factored financial inflows till their expected end of life,
Right.
right? So now for both of you, we need to understand what's your lifestyle cost is,
Hmm.
right? So we have to draw, or we have to estimate, okay, what your lifestyle cost can be on a monthly basis. First case, this is the first step,
Right.
right? Say now, if can
Let's
I
say it's 1 lakh rupees per month. Let's say.
can I present
Yeah. Yeah. You can present.
share screen, right? Yeah.
Yeah. Now, if you can maybe sit closer to the Wi-Fi because your video is lagging a lot.
Is it
Yeah. At least to me, it's lagging a lot. Every frame is dropping.
okay? Give me a second. I think there is some problem with Wi-Fi.
No issues. You can present. You can present. We can do
I'll
that.
present. Can you see my screen? No.
No. Are you presenting?
Yes, I am.
Like, did you press the share screen and then you selected something? Nag is having a lot of issues with the Wi-Fi today. The video is okay. All right then. Okay. So let him just join back, right? Just a minute. Yeah, just give us 1 minute. You're able to see without lag. Okay. Wonderful. Wonderful. That's great. So just give us 1 minute. Yeah, he'll be back in 1 minute.
Some problems.
Yeah, Nag. Now it's fine. Now it's fine. Please
Right.
continue.
Yeah. Can you see my screen?
Yes, we can see your screen. Yes.
Okay. Right. So now it's as simple as that. We have to understand our retirement costs first. I mean, like Okay,
Yeah.
what is your estimatable cost that you can put in? Say for example, now for you, Abdullah, I am taking your case. Okay, you think that, okay, this is my cost. Say for example, it comes to 1 lakh rupee per month. Say like
Mhm.
house maintenance 8k, maintenance utility 4,000, support staff 5k, insurance 6,000, food 17,500,
Can you
fuel,
just zoom a bit for people on smaller screens? They might not be visible.
right?
Yeah. Perfect. Perfect.
So this is the estimated expense that you may incur on a monthly basis, for example.
Hmm. Hmm.
Right? Assume by the time you retire, you will have a house.
Right.
Okay. So now here in this case, for you, for example, okay, the monthly cost in today's value, okay, it comes to around 1 lakh rupee per month. So it comes to around 12 lakh rupees per annum, right?
Hmm. Hmm.
Right. So
12
now
lakhs per annum. Yeah.
12 lakh rupees per annum.
Hmm.
Now, so the current expenses per month is 12 lakh rupees, and your profile is 25 years old, for example, right? And your expected age of retirement is 50.
Okay.
Is it big enough? Viewable, right?
Yeah. Yeah. Perfect. Perfect.
Right. So we have another 25 years, okay, and our plan is to build a corpus, okay, which can help us to sustain our expenditure on a monthly basis till the age of 85, for example,
Hmm. Okay.
right? So now the 12 lakh will not be the same 12 lakh, right? Even from the next year,
Hmm.
because there is something called inflation, okay, that which may come in and definitely will inflate your expenditure,
Right.
right? So when your budgeted costs are 12 lakh rupees per annum, okay, our inflation in India being at 6% per annum, okay, this 12 lakhs will become around 51.5 lakhs at the age when you are 51.
Okay. Hmm.
Okay,
Hmm.
this 12 lakh is becoming 51 lakh. It's as simple as that, right? That's a future value.
Correct.
Meaning by the time you are 51, the so-called value that you derive from 12 lakhs,
Hmm.
okay, can be achieved only with 51.5 lakhs,
Correct. Hmm.
right? Because of the inflation.
Because
Okay,
of inflation. Yeah.
right. So now you want 51.5 lakhs at the age when you are 51,
Yes.
right? And you will need 54.59 by the age you are 52, because the 6% inflation will creep in and
Hmm.
definitely inflate your cost by next year, right?
Hmm. Hmm. Hmm.
Right, that way if you see, your pensionary requirements will go up and up on an yearly basis. Am I right?
Yeah.
Right. So given with 6% inflation, okay, by the time you are 60, okay, your requirement, okay, which can give you value of 12 lakhs by the time you are 60 will be 87 lakhs.
Correct.
Okay, this way, let's plot our inflow requirements or pensionary requirements till you are 85.
Hmm. 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 Hmm.
Meaning what? We should have a corpus, okay, which will be invested in such a way that you should be getting these inflows on an yearly basis,
Correct. Correct.
right? So now we will try to understand what is that corpus that we need.
Hmm. Hmm. Got it.
Any questions so far?
Audience, if they have any question, they can post it. We'll reply. You can post it on YouTube live comments.
So now the first step is estimate your monthly expense to your
Hmm.
lifestyle, okay, and extrapolate this to the your
Future.
financial inflow requirement from the time you want to retire till your expected life, factoring in inflation,
Correct.
right? So two steps are done now. So
Mm-hmm.
now the third step, what we are trying to do is we are trying to understand, okay, what is that corpus, okay, that we need, which can help us to get these flows on a yearly basis with 100% certainty.
Right.
Because post retirement, the most important thing for anybody is no risk, right?
Mm-hmm.
See, you will get peace when you are certain about something,
Yeah.
correct? And retirement is such a case that you don't want any kind of contingency getting factored in.
Correct. Correct.
You want abundant certainty there, right? Perfect. So now we'll do some workings here so that we will try to understand what our corpus is.
Mm.
So now is you not, it's not an assumption. I'll tell. Say for example, if you have a corpus of 5.26 crores by the time you are 51,
Mm.
okay, and 51st year's requirement of 51.5 lakhs will be withdrawn from that corpus, and the remaining corpus of 4.74 crores will be pushed to the FD, where the return is completely certain for that shortest time span of 1 year. Am I
Mm.
right?
Yeah.
Right. So your FD returns can get around 5.5% post tax, assume.
Okay.
Okay. So that will become, with that return, the corpus will become 5 crore, 5.075 crores, somewhere around like that. Right.
Mm.
Okay, that will be carried forward to the next year, and from the next year we are going to pull another 54.59 lakhs, which is our inflated cost for that year, right?
Mm. Mm-hmm.
Meaning what we are trying to do, we have arrived at a corpus that is needed for 10 years, wherein we will put that into FDs, and we will pull the required financial pension requirement for that year, and the rest will get invested into an FD, which is a clear no risk free instrument guaranteed by the government of India, for example.
Mm.
Okay. So this way, your 5.26 crore corpus will be sufficient till you are 60.
Yeah.
Perfect. Right?
Got
Any
it.
question?
Yeah.
Okay. This is for 10 years span. Okay. Now, in the same way, we will need 9.42 crores by the time you are 60, and the same planned in such a way that this 9.42 crore will be sufficient for us till the age you are 70.
Mm.
Okay, and later at the age of 71 you will need around 25.61 crores. Okay, that will be sufficient for you till you are 85,
Mm.
right? So now the question is how we arrived at these figures: 5.26, 9.42, and 25.61, right?
Yeah. One question that I would have is that let's say we are retiring at 50, for example.
Yeah,
So at that point of time, if we are retiring, so what it essentially means is that our primary source of income is coming to an end
exactly.
at that time. So at that time, we should have sufficient money to carry us all the way through, let's say the next 35 years.
Correct.
But in this calculation, 5 crores we are getting, but it's getting all used up in the next 10 years.
Exactly.
And then we are getting 9 crores again. So where's that 9 crores coming from?
That's where I'll come say. Now, for
Yeah.
example, you will need 5.26 crore for sure by the time you are 51. Okay, so that
Hmm.
your next 10 years are taken care of.
Correct.
Correct. And now we will need another chunk of 9.42 crores by the time you are 61,
Hmm.
right?
Yeah.
Meaning we will need an X amount, okay, which can be invested at a very, very conservative return of 10% per annum, invested for 10 years, which can become 9.42 crores,
Got it. Got it. Okay.
right?
Hmm.
So What is that amount? That amount is around 3.63 crores. At 10% will become 9.40 crores by the time you are 60. You got
Okay.
it?
Mm-hmm. Got it.
Right? So far, till if you want to survive till you are 70, you will need a corpus of about 5.26 crores plus 3.63 crores
Okay.
by the time you are 51.
Hmm.
Got it?
Mm-hmm. Got it. So what we have done here, very interestingly, is that you have divided the corpus into something super safe like FD and
Ah,
something with higher risk return reward like maybe a large cap index fund.
exactly, correct. See, since we are looking for a 10-year span and we
Yeah.
want to multifold it for 10 years, since that's the long-term perspective, we are going to equity with this
Yeah.
chunk so that that chunk can become a bigger chunk for you by the time you are 60, so that your next 10 years are taken care of.
Correct. Correct. Got it.
When we are looking at the short term 10 years time span to survive, okay, we are going to put in our chunk into FD or any other risk free instrument so that we can pull those necessary pension requirements on a yearly basis, or for the
Got it.
matter even monthly basis,
Yeah. Yeah.
right? So in the same fashion, your 25.61 crores will be your requirement by the time you are 71. That 25.61 crores can be achieved with 3.8 crores invested at the age of 51,
Hmm.
same at the rate of 10%. The expect, see, the
The
conservative
present
return is not
value
12%
obviously will
here.
be
We are
smaller.
just, sorry?
The present value is getting smaller as we are getting further away from the.
Exactly. Correct. Right. So now, by the time you are 51, okay, the total fund you will need is 12.7 crores.
Okay.
In this 12.7 crores, the 5.26 crores will go for your short term FDs so that you can pull the money on a regular basis as the requirement comes in. And whereas another 3.63 will go into equity large cap, okay, which will give us, our, which is, and we are factoring only 10% ROI on it, I mean CAGR on it,
Hmm.
okay,
Hmm.
which can potentially become 9.42 crores after 10 years, and another 3.8 crores going into the same zone of equity large caps with 10% expected CAGR, which can become 25.6 crores by the time you're 70,
Correct.
right? So now the corpus that we need is 12.7 crores by the time you are 50,
Hmm.
right? So now we have the target established. So now you got three steps, right? So first step is estimating our expenditure, okay, and second step is extrapolating that to the financial inflows that are to be that are to be pulled, okay, post retirement till the expected life, and third one, estimating the corpus. Now we have estimated the corpus, which can which can be 12.7 crores here,
Yeah.
right? Any questions so far?
Perfect. I got it. If the audience has any question, they can post it in the comment section. We can
Right.
continue. If the questions will come, I'll let you know.
Done, right. So now we have time frame left for 25 years, right?
Hmm.
We have a target of 12.7 crores.
Okay.
12.7 crores as a destination point, okay? If we can invest 74K per month,
Hmm.
okay, with a target of 12.5%, I mean, in the sense with an estimated CAGR of 12.5% per annum, okay, we are going to achieve this 12.7, meaning if you want to retire by the time you are 50, okay, you will have to invest around 74K into equities.
Which seems uh it seems doable, right? Because like 12.7 crores looks such a huge amount, but when you break it down like that, so 70K per month is not that difficult. Yani, 12 crores seems like a lot, but if you compound it over time, And if you take back the present value, then it's just coming out to be 70,000 per month.
And moreover, this 74K, what we have estimated as your savings or investment that has to be done, this will go on decreasing its value, right? Say, for example, after 5 years, okay, your salary will become 5 lakhs. For example, today's your salary is 2 lakhs. 74K putting aside for your retirement could be a difficult thing, but over a period of time, the 74K looks very small,
Correct. Correct.
right? So it's very good for anybody who is at the age of 25, 26, okay, to start investing into equities on a very regular basis, so that they can build this retirement corpus and they can retire very easily,
Yeah.
and
Yeah.
with all certainty they can get the pensionary flows.
Fantastic. Yeah.
Okay, now say for
And here,
example, yeah, yeah.
yeah, yeah. Please continue. Please continue.
So this is not the end of it. So now we arrived at the amount that has to be invested on a monthly basis, okay, to achieve your destination point called retirement,
Hmm.
right? Now, say for example, everybody will have their own savings or some assets by now, right?
Hmm.
Say for example, you must have had some real estate, okay? Say for example, a
Hmm.
land, okay, which can be 10 lakh rupees today,
Hmm.
okay, and you must be having some equity already, okay, passed on from your father or mother or anybody, or you would have organically saved it. So this might be around 5 lakh rupees, right? Okay, now your net worth is coming about, say now for example, your real estate land, okay, which can give you 12% returns, okay, by the time you are 50, can give you around 1.7 crores,
Hmm.
right? And your equity 5 lakhs can give around 95 lakhs by the time you retire, for example. Now
Hmm.
this 2.65 crores is your net worth, okay, or which can be realized by the time you are 50, given you don't have any other tax for this specific asset, meaning this will be available only for your retirement, for example, okay.
Hmm.
We can cut the net
Correct.
worth from here, and the saving or investment that you'll get to do on a monthly basis will still come down,
Hmm.
right? So assume if somebody has 50 lakhs already invested here in equity, for example, this will become 9.5 crores, and your whole net worth by the time will be 11.2
We don't have
crores.
anything left to do
You'll
then.
have nothing to save. I mean, you'll be very, very small, right?
Yes. Yeah. Hmm. Hmm.
So
Hmm.
so it depends on what is actually your standard of living, okay, for which how you estimate your costs now, and how you factor the inflation and draw your inflow requirement for the post retirement phase, and you arrive at the corpus that is required for it, and what is the time span we are left with, okay. And depending upon the time span and depending upon the CAGR expected, you will be able to arrive at a figure, okay, which has to be invested on a monthly basis,
Yeah.
right? If you already have some net worth built, we can easily tag them to this particular corpus, and the corpus requirement will still come down so much, so that the amount of investment you will get to do will be much less,
Hmm. Right.
right? Right. So this is a very, very critical part of the wealth management, where we will try to understand how much the profile needs, okay, on a monthly basis, okay, to invest, so that they can achieve their retirement at their best possibility.
Correct. Correct. This is true financial planning, basically.
Exactly.
Hmm.
So now, how equity is going to help you? So far, any questions?
I think one very interesting thing that you did towards the end is that you also took into consideration the other assets that one might have incidentally, like real estate or equities that we might inherit from our parents. So that
Ex-
is also something that we kind of need to take into consideration.
exactly. So here, if your return is far more better than expected, you will
Hmm.
be able to achieve your retirement much quicker,
Correct.
right? This is a very very conservative return. I mean,
Yes, very
based on
conservative. Yeah, yeah,
our,
very conservative.
based on our, say for example, Nifty grows at 12%. Say for example, Nifty is what, Nifty is an index fund or index, okay, which has all kinds of growth, non-growth, okay, value with no value kind of companies in it, as you know, right?
Hmm.
So taking that as a base, 12% is something which is a conservative return. Given you can grow beyond that, probably we can achieve it much faster. And interesting fact here is 66.84 lakhs invested today, for example,
Yeah.
right, for 25 years, you will make this 12.7 crores.
So either we invest 8,000 every month, given other assets as well, or
I'll remove the other assets and let's see how we can build it organically,
hmm,
okay, or how we can build it on a lump sum basis.
right. So either we invest 74,000 every month, or we invest 66 lakh lump sum to begin with.
Lump sum, yeah. If you invest lump sum or here and leave it, you are going to build your retirement corpus.
Got it.
Say everybody takes MRF as one classic example of how the compounding can do wonders, right? As you know,
Hmm,
MRF has grown at 18% per annum.
hmm.
Let's see. I'll recheck this once. Let's take for 20 years,
Yeah, 20 years is a good time horizon. Yeah.
right? 1484, right? Can you see that figure, right?
Uh,
The closure. I'm taking the date 1st March 2004, for example.
can you move the cursor around?
Yeah, this is the 1 second.
If you can
Right?
just draw over the screen, it will be easier for the audience to just be able to see. Just scribble a number.
Okay. So 1st April 2004. You can see something over here.
Yeah, yeah,
1556 rupees was the MRF price.
yeah.
So first, say 1st April 2004 minus, I'll just for formula sake, okay, 1556. Whereas today's price is 1 lakh 31,302. 302. But I'll, for example, if you have to sell this off today, I'll have to consider my long term capital gains. So I will remove uh, into 11% here, including all taxes. So what I make here is this much, right?
Yeah.
Equal to XIR. Clear? XIRR In fact, it's much more higher.
It's 24%. This is too good.
This is too good, right? And that too from a large, I mean, it's almost a large cap company, as you know, right? Because they are the biggest market shareholder in tires, right?
Yeah.
And you know this brand for very long, and we know this through Sachin, right? And let's see what is the dividend they are paying. So dividend yield is very less, so 0.13. So that's a very negligible thing. So let's not consider it even.
Hmm. Hmm.
Okay. So 24% from a company like MRF, you just stay hold, you make merry out of it,
Hmm.
right? You don't need to do anything, right? So
Yeah.
now the question is whether can we make 24% from each stock, and then at a portfolio level we can make 24%. No, may not be, but I'll make this 12.5%, factoring in all the contingencies, all the mistakes that I can that I can factor into my portfolio. Even I pick 50 stocks, wherein 5 stocks go off, and another 45 stocks do well at least with 10-15%. Some of them doing much better than 15%. So I'll fall around this 12.5% conservatively,
Hmm.
right?
It'll most likely be better than 12.5%. This is like a very conservative
Yeah,
figure.
exactly. Let's be very conservative, because 12.5% is twice your risk-free rate,
Right. Hmm. Hmm.
which is very good, right? Say for example, now if your return on investment is just 6%, assume, see, you will have to save around 1.92 lakhs.
World of a difference.
Got it?
Yeah. Yeah.
So meaning the biggest risk you can take today is if you cannot take the risk,
Yeah.
right? If you're not pushing your extra savings into an asset class which is predominantly dependent on the flourishing of the economy, okay, you cannot make good money,
Hmm. Hmm.
right? See, if equities do well, only the economy then does well, right?
Correct.
Meaning we are predominantly in the safest zone than any other asset class.
Yeah. We are betting on the economic engine of the country, basically.
Country, and on the country which has the potential of making 7 to 8% per annum with no big hurdles, despite having any political environment,
Hmm.
unless it is very bad,
Yeah.
right? So next 20 years, if you make 7% per annum on a GDP basis, the corporate revenues will fall around 12 to 13% on an average, right? When the average corporate revenues are around 12 to 13%, we can pick some good companies which can make 15 to 20%, and the valuations also will be definitely around 15 to 20%. Consequently, right?
Right. Right. Right.
And the beauty of equities is you can diversify very well than going and putting whole money into one single piece of land. I'm not telling that real estate is bad, but the diversification is quite not possible there.
Yeah.
Whereas here, the diversification is very well possible, and the liquidity is the extra boon for us.
Correct.
Okay, so putting away everything here, now this is the easiest way of building a corpus. Okay, with proper scientific way of building the corpus, pulling your financial requirement, factoring in inflation. Okay, and you will get full clarity on how we live till your expected life, or how your till your how the life is planned till your expected end of life.
Absolutely. Can you just increase the return to, let's say, 15% and see what's coming? 49. Great.
If it is, if it is
If it's
20,
20%, let's say we have Warren Buffett, so it's only 22,000 per month.
exactly.
Mhm.
See, even SBI gave 15% return for the last 20 years.
A lot of it, like one thing that I would like to add over here, since we are talking about long term equity, is a lot of times some really good companies might not give any return for periods of maybe 2 years, 3 years, 4 years. But if we really stretch the horizon to 10, 20 years, then even those companies which remain in consolidation for multiple years, when they do break out of that consolidation, they compensate for the consolidation. you
Exactly.
know, they
True.
give, they make up for it basically.
Exactly. True.
So
True. Because that's how
the
the cycles are, right? I mean, see, for example, HDFC is not performing for the last 3 years. Okay, it can take hardly 6 months for it to compensate everything that it couldn't perform.
Yeah, correct, correct, correct. So, matlab, this is, I'm really emphasizing on this because in India, especially right now, people have very short term mentality. Like they want to trade, they want to do day trading, they want to do swing trading, they want to buy today, sell maybe next week or next month. But these people, they're not looking at the big picture. And
Right. True.
most traders, they don't create, most retail traders, they will not be able to create long term wealth if they just stuck to this law, the short term sort of mentality.
Irony is we don't calculate. Say, for example, if you grow at 100% per annum, in 10 years you will make it 1,000 times,
Hmm.
right?
Very soon you surpass global GDP.
Exactly. In no time you'll go beyond Apple, Reliance, everybody, right?
Right,
And
right.
even yesterday I got a message from somebody asking me, bro, whether you can give me 1 lakh rupees per month, okay, if I give you 10 lakh rupees. Okay, I told him that's not how it works. Okay, see, if you can understand, if I take 10 lakhs from him and if I promise him 1 lakh per month, I'm a clear case of bankruptcy, right?
Yeah.
See, if I have to pay him 10 rupees per month, I'll have to make at least 15 rupees because my tax guys will take 30% from me.
Hmm.
So 15, 30%, 4.5 gone, 10.5 left, 10 rupees given to him. So shall I take all this stuff for point 0.5? Given first case, I don't even make 15%, right, on a monthly basis. If I make 15%, meaning I'll make 180% on a yearly basis,
Hmm. Hmm.
right? If this math comes in, why I will even take 10 lakhs from him, right?
Correct.
So math is the most important thing. Our eyes, ears, our senses will open when you put things in a perspective, especially in finance, right? First of
Hmm.
all, you're working hard to make a retirement corpus, but you should know, right, what is that you need basically.
Hmm.
So unless you estimate what you need, you cannot really balance your life also, right? I mean, you can give time for certain portion for this, I mean, for work, for family, anything for that matter, right? If your need is just 10 crores by the time you're 50, okay, and there is no point making 100 crores.
Hmm.
There's no point taking so much risk. If
Correct.
your 10 crores can be built with your, for example, let's take this case, for example, you can make only 50K as your savings, for example, right?
Hmm.
50K on a monthly basis invested at 12%, assume, okay, that will become 10 crores after 25, 26 years.
Hmm.
Am I right? Right. So now you are giving now 8 hours, okay, for the work, so that you'll make 50K, okay, and that good time for your family, which is reasonable and very good for family, okay. Now even you make 1 lakh by spending 16 hours, there is no point that you cannot do anything with more than 10 crores after a point,
Hmm.
right? Right. So if you're making enough to create your corpus or any other goal for that matter, okay, there is no point stretching beyond that. So what I mean to say here is you should know what are your wants are, okay, what is that income that you're making now and whether that is sufficient or not. If it is not sufficient, we have to make more money, or we have to cut down on our goals,
Yeah.
isn't it, right?
Correct.
So
Correct.
all these perspectives can be built only with the plan in place. If
Absolutely.
you
Yeah.
don't have a plan, you'll never know where you are standing. First case,
Mm-hmm.
we should know where we are standing. What are the resources we have? What are the objectives we have? How we can map them, and we will definitely have a clear perspective of everything for that matter.
Correct. Fantastic.
So, any you from your side, any questions?
So one question that I can have is this planning that we did. So this was on a like conceptually and theoretically it made a lot of sense. But coming to the practical side of it, how does one actually go about, in your view, doing this? Will you recommend direct stocks? Would you recommend mutual funds? And maybe you'll recommend different instruments for different people of different sort of corpus size. How do you manage that?
Right. See, if they hire a fund manager or an investment advisor like me, you can go ahead with stocks, because an
And what
investment
is the minimum,
advisor.
what is the minimum portfolio size that you would be comfortable usually starting
See,
with?
I don't mind even taking 10K from a guy and putting it into the stocks.
Okay.
Okay. So,
It
or
can
our,
get diversify.
yes, say for example, first month we'll go with five stocks. After that, we'll add another five stocks, right? To start with.
Okay.
Okay, but if you're not having any advisor with you, okay, or if you're not having any guide of that sort, okay, better you pick a good large cap fund, a direct large cap fund, and just
Hmm.
go invest in it.
Hmm. Right.
Even your ELSS will do well, right?
Hmm.
You will get tax saving on that, 1 lakh rupees or 1.5 lakhs as per ATC. Okay, and you can have this corpus being built.
Can you talk a little bit about ELSS? A lot of people ask about it.
This is an
What it is,
equity.
what sort of tax benefit it provides.
Yeah, you have a section called ATC, right?
Hmm.
Okay, in that you can take about 1.5 lakhs, which can have an exemption from your income.
Income tax. Hmm.
Okay, so that 1.5 lakh investment, okay, if you do it to ALSS and submit the document to your company, okay, that will be considered as your investment made for that year into a tax exempted savings scheme or investment scheme for that matter.
Hmm. Hmm.
Okay, so that 1.5 lakhs, say for example, if you invest 1.5 lakhs, if you are in the tax slab of 20%, you are almost saving 30K in it through it, right?
Yeah. Hmm. Hmm. Hmm.
And moreover, the amount can go into a more productive zone called equities.
Yeah.
If you take, for example, if you take an LIC savings scheme and you put 1.5 lakhs over there, you will still get an exemption, which will save you 20% there. But your LIC savings scheme gives you around 6 to 7% over a period of time with many conditions in place, many locks and many many conditions with it. Whereas equity ELSS uh, has to be locked only for 3 years, and after that you can withdraw it, and you will get this 20% exemption as well, wherein 20% plus around 13-14% returns. So 30.4% effectively speaking, for example.
Hmm. Hmm.
Right. So if you have extra savings, okay, where you are looking to invest so that you'll get tax exemption, go see your ELSS.
Right. 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 Acha, one question I had regarding taxes and fixed income. Now, on our end, we only invest in Sharia compliant investments, so we don't do fixed income. But just for the sake of knowledge, what I wanted to understand is that in equities, in long term, we only have to pay 10% on the capital gains.
Correct.
How is fixed income returns from fixed income instruments taxed?
Fixed income are taxed based on your slab. Say,
Right.
for
So that
example,
is a
a
much
villa,
higher, right? That's what I'm trying to say.
yeah, it is higher than your equities, yes.
So if you're falling on a 30% tax slab, right? So
Hmm.
you will be charged 30% on your interest income, right?
Exactly, correct.
Right. So this is actually very interesting. So if you're making, let's say, 15% per annum on equities, which is, let's say, reasonable expectation, after 10% tax, sort of deduction, you will be earning, let's say, 13.5%, right? But on your fixed income, let's say you are earning 6%, and then you fall in the 30% tax slab. So 30% of 6% is 2% approximately.
We'll do that math for convenience. That will be very good actually. Say for example, we'll take the same example, Abdullah.
Okay.
Say in 2004, for example, I have invested minus 1556. Okay.
Hmm.
Now I gross at how much? Say for example, my rate is, so since it is very long term, I'll take 7% as my rate, right?
Fixed income. Yeah. Okay.
Okay. Now my 7%, comma 20 years, comma, right? My present value is this much, right?
Hmm.
I make this much, right?
Okay.
In your
20
FD,
years.
for example, yeah, for 20 years. Now the case is, what is that extra I'm making? I am making this much is my income. Am I right?
Hmm. Hmm. Hmm.
Now I'll have to, if I, for example, if I am in 10% slab, 10%, 20% is 20%. Now assume that we are in 20% slab, right?
Yeah. Add one for 30% as well. A lot of people would be in 30%.
In 30%, right? Right?
Hmm.
So 4465 into 30% gone, meaning I'll take zero point 0.7. That's the net. This is what
Hmm.
I make,
Hmm.
right? Meaning how much I'm making? 3125 plus 1556. This is the total. Meaning my 1556 is becoming 4681. Got it?
Hmm. 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 Hmm.
Right? So I'll put 4681 straight here. See, I'm making 6%.
Yeah.
Whereas the rate on the bond is 7%, I'm making only 6%.
Okay. Okay.
So meaning the impact of tax on your fixed income risk-free zone is much higher than your
Correct.
so-called risky long-term equity investment.
Hmm. Hmm.
Because
Let's
there
let's do this, let's do this calculation for equities with just 10% uh, tax cut, and let's say we assume 15% rate of return.
right. So now I'll take 3125 instead of zero point 0.7, I'll take 0.89, isn't it?
Hmm.
Right? My net will be
And the
55.
return would be higher than 7%, right?
No. Let's take the constant here. Say assume even equities gave
Okay.
7% only, for example.
Right, right, right. Okay.
So see, it makes no almost. I'll see 6.5%. That is 6%. This is 6.5%.
Hmm.
Because this is the same 7% thing what we are looking at. That's why you have 6.5%. If you
Yeah,
have
yeah.
to do a comprehensive math, you'll see big 1.5 difference.
Hmm.
Because 1.5 difference creates a lot of
Lot of difference. Lot
significant
of difference.
compounding difference over a period of time, right?
Hmm. Fantastic. This was fantastic. Any questions from the audience? Will be happy to take it. So one thing very interesting that has happened, Nag, since we connected, I think last month or so, maybe
Yeah.
45 days ago or something like that. I asked you, it's a bull market and everything is roaring, and you said, one of the drawbacks is that because this bull market seems never ending and we are not getting a pullback, so we are sitting on cash and we don't know where to deploy. And now we have a very strong correction in the small cap and mid cap space. The index is down almost 10%, and individual stocks are down 20-25%. So what are your thoughts on that?
Small caps, I'm still cautious.
Right.
Okay.
Okay.
Anything that is new fund that has to come in is not going to small cap set for me.
Okay. So you're still allocating to large caps and mid caps.
Yes.
Okay.
Uh,
How do you... Yeah, yeah, please continue.
yeah, because if you see the large cap, say for example, if you take the case of Nifty 50, Nifty 50 hasn't fallen much, right? Say, for example, from its highs of 22,600 to 22,100, hardly 2.53% now, right? It is still moving out there in a very, very small zone.
Mm-hmm.
So for me, the correction meaning at least 5-6%, wherein I'll see again 21,000. Then I'll may react and I'll push my clients to come on, be ready with the funds so that we can push into large caps. Whereas small caps, I'll wait for a while. I want to see more uh, more optimized values there rather than I'll say correction.
So you're expecting more correction in small caps?
Small caps, yes.
Okay. Okay. So okay, another question that I have is, mid cap is actually, especially in Indian context, is a very interesting sort of genre. You know, they are mid caps, but they behave a lot like small caps.
Yeah,
You know,
when it comes to
so
volatility, right?
how do you treat mid caps?
Uh, See, I don't have anything on mid caps. See, I know only two companies. Okay, I'll see many of them as large caps, or I'll see many of them as small caps.
Hmm.
Okay, so mid caps, you say for example, MRF is a mid cap.
No, it's not a mid cap.
Okay,
How
say
is it a mid?
say let's go to, for example,
It's
Scripture.
55,000 crore market cap.
So when
Anything
it,
above 15,000 is large cap, right?
yeah, so now 55K, it's almost in that range, right? Okay, even for example, um, if you take
So
55 crores,
large cap is more than 15,000 crores. One
15,000.
five. So this is four times of that almost.
Four times of that, yeah. Say for example, MRF, if you see, you can see this is a monthly chart, for example, right?
Hmm. Hmm. Hmm.
See the fluctuating nature of how it has, see, it has gone to 36,380, 46,399. It has come down to 30,109, where you see a fall of around 30%, right? 30% is a big fall, right?
Big fall. Yeah.
Yeah. See, even then, with all these volatilities, with all these fluctuations in place, okay, you can see the company making its highs, okay, here and there, and achieving that 25% returns.
It's behaving like a mid cap. Yeah.
Right. So for me, any company is like, when it comes to volatility, maybe I'll see it. Okay, this is volatile for me. Okay, I don't want to risk so much in it. Otherwise, everything depends on the fundamentals, right?
Hmm.
If the company is making incrementally making good revenues over a period of time, okay, I don't see whether it is volatile or not. I'll stay invested and stay calm,
Hmm.
right? So differentiating it as a mid cap, a large cap, okay, or small cap, okay, will not make more sense when you are seeing the fundamentals really. See, if the markets are really bad at a macro level, definitely your small caps, irrespective of how they're performing, will get dented for sure at valuation level.
Correct. Okay, Nag. Any other thing that you would like to share?
That's all. So everybody, I want see, this is what, plan the things and execute it, and we will know where we are standing. So any deviations or diversions can be really controlled, and we can move on to the path, so that we
Right.
can achieve that so-called destination or goal, uh, either quickly or a bit late. But a plan is a necessity. It's an imperative. Yes, that's all from my
Correct.
side.
By the way, do you look at US stocks?
Yes, tech specifically.
Okay.
I'm looking at US stocks, and we created one secular diversified portfolio for one of our clients very recently.
All right. I've been looking at Nvidia and just crying over it.
Yeah, one of our clients have Nvidia, so happy
Fantastic.
about it.
Yeah, I mean they have really pulled it off,
Yeah,
And in hindsight, it seems so obvious. In hindsight, it seems so obvious.
correct.
Like just around 1 2 years ago when ChatGPT came out, uh, and things started happening in generative AI space, any sensible investor should have asked, who's backing all this? What is
Mm-hmm.
this running on? What is this running on? Google is doing it, OpenAI is doing it, Microsoft is doing it, everyone is doing it. But what is it all running on?
Running off.
And it was a simple answer, it was Nvidia. But I don't know how many people asked that question.
Correct. True.
So
And one interesting thing I found in US is Visa, for example, Visa and Mastercard. See, these guys are making highs on a ev- I mean on a period. I mean like every next year,
always,
it is incrementally high.
yeah.
One beautiful stock I liked, even Mastercard for the matter.
Hmm. Mastercard, Visa, I think these guys have given like 25% CAGR,
Yeah,
something.
I have to check how much they have given. Say for example, 2014, 75, 481, around 18, 19%, around 20%.
Hmm. Fantastic. So these are basically payment processors, right?
Yeah,
Uh,
yeah. They
Mastercard.
enable, yeah, they provide the infrastructure required for these payments.
Correct. Correct. Hmm.
So there are some good names. Eli Lilly, you know this?
I've heard a lot about this company. Can you tell me more about this?
They are the monopolistic guys in diabetic for medical formulations.
Ha 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 ha. Right. So something happened with this, right? In Twitter, when Elon Musk did that, you could buy a verified symbol for like $10 or something. Someone actually created a account for Eli Lilly, and they
Okay.
posted insulin is free, and the stock fell by I think 10% or something that day. Then people realize, oh, it's a fake account because they make all their money from insulin.
See, if you see how the compounding, not just with money, with knowledge works. Say for example, this company was founded by Eli Lilly in May 1876.
Hmm.
Okay, 1876. Imagine, this is such a 150-year-old company, right? See, these guys are listed in 1970 somewhere around at $3, for example. Now around 770, they have created immense wealth and immense value to the society, right? So that's a great
Correct.
thing. So we have to understand things cannot be built in a very very short span. Like people expect everything to be in place in a year or two. But if you see companies like this, you will really understand what they have gone through for such 150 years and what they have gone through to build such big companies, right? So many adversions, I mean adversaries they would have faced, they would have overcome, right? They must have seen everything of it.
Mm-hmm. Especially look how the company actually took off after 2019.
Exactly, correct.
It's a straight line after that.
Yeah. So there are many big companies in US in specific. Say if you take ITC as well, they are such an old company. Even L&T in India.
So if someone in India they want to invest in US stocks, what do you recommend? What's the way to go about it? Do you use something like interactive brokers or like how
No,
do you?
from India we can do this IndMoney app through IndMoney. We have clients where we are
Hmm.
doing it through IndMoney. Okay, we can take
Pro
in
also has that option, I think.
uh, Bro also has, then Bro. So I don't know who is the best in this specific domain, but actually there are options. But again, if you are investing more than 7 lakhs per year, you have this liberal RSS. I mean, you know this liberalized remittance scheme, right? Wherein beyond 77 lakhs, okay, the TCS will be applied, wherein you have to take a dent of 20%, and you have to call for a refund later.
Okay, damn, that's not very good.
Yeah, because you have to have a 20% TCS collection at
That's
source.
20% is on what? That 20% is on what?
Whatever the amount of investment you have to put in. But
They take 20% of that?
yeah, see, even for example, if you want to spend more than 7 lakhs for your travel expense, okay, there'll be 20% TCS.
What, really?
Yeah, yeah, yeah.
Like 7 lakhs on what? Like personal travel?
Yeah, personal travel or any travel for that matter. Okay, I disclaim. I mean, I'll give a disclaimer here. I don't know the exact gambit of how this works, but actually, this is what I know at a very very macro level.
Okay, this is very disturbing. Like the government has restricted how much we can travel.
You can
Okay, anyway.
travel, but you have to notify the government. That's all.
Hmm. Okay, fantastic session, Nag. I think we covered a lot, and I would, suggest the audience to maybe replay the spreadsheet part of it, maybe once or twice, to really understand what Nag did there. It was very beautifully made, and the calculations were very beautifully presented. So thanks once again. And any closing comments, Nag?
That's all. Thanks a lot. We'll see you again together with some other good
Sure,
topic. Okay,
absolutely, absolutely,
let's have it one on a monthly basis at least, so that we can contribute each other as well the audience that we are able to pull off.
absolutely, absolutely, fantastic. Okay, everyone. Thanks for attending. Thanks, Nag.
Thank you. Thank